as a new year present or as a new year gift, let me create a small case for 2024. So what I'm doing is I have gone on small case. I'm not sharing this small case with anyone. You can just look at the stocks that I am currently buying because I'm not allowed to share it to anyone. So this is something that I'm creating called New Year 2024. So I'm a big believer of not having too many stocks in your portfolio. I prefer having 10, maximum 15 stocks. So the first stock that we're looking at for the next 2024 market is KPI Green. So let me just quickly go through it. I will show you KPI Green. It is in the green energy segment. It is a company from Gujarat, the part of KP Group company, sitting at 5,899 crore market cap. It has done a very good rally in the past, and it's not just about the rally. Even if you go down and look at the order book, it keeps winning new orders every single week. It wins 1 or 2 orders constantly. You can look at the investor presentation, but let's quickly go through the financial analysis. So stock P is sitting at 43, which is okay. ROE, ROCE is also very good, which is return on equity is 53%, ROCE is 24.7%. Market cap to sales ratio is a slightly higher, it's 7.7, not a very comfortable zone. Right now, this is in the energy space. They have solar panels that they generate energy and then they give it to other companies and they keep getting orders from that. The only advantage of this company is you can see massive quarter on quarter growth. So this is the quarterly result: 75, 122, 160, 179, 182, 189, 215. That is why the stock is continuously rallying, and the margins are also sitting at anywhere between 30 to 35%, and that is something that is translating into the revenue as well. As you can see, the revenue 34, 59, 102, 230, 644, and now at 766. So it is doing really well in the last 5 years track record. Even if you look at net profit, 9, 6, 22, 43, 110, 134. So even the EPS, which is earnings per share, is also going up. The only uncomfortable part about this is the borrowings, which is 838, and the reserves are only 289. But again, this is an energy company, so they do have to do this, but very high chances they might raise a little bit more amount of money right now through a QIP, which everyone else is doing in the market. But from the next 1 year perspective, looking at the green energy space, this is very attractive. The next company is Precall. So Precall again is a very good company, sitting at 4,600 crore market cap, doing a massive growth momentum right now, doing a massive capex right now, and they're giving a beautiful revenue guideline as well, which can be doing really well. This is in the automotive space. Again, if you come down and look at the profit and loss statement in the last 3 years, you will see 1239, 1413, 151921. So financially also it is quite good, profitable as well. And it will cross the last year's profit also, right? If you look at from the balance sheet perspective, very comfortable and very healthy. And if you look at the promoter holding, it is in fact gone up. If I look at yearly, 37, 36, 38.51, and we are seeing a massive rise in FIIs, and we are seeing a good rise in DIIs as well. So overall, this company is also doing really well. So that is my second pick of the year. Third is Venus Pipes. The only reason why I'm choosing Venus Pipes is for 2 reasons. One, it's a small company sitting at 2,800 crore market cap. Ashish Kachulia had invested in this, but I think he actually got out of it. It is in the steel space. Looking at the entire construction theme that is happening for the next 1 year, I feel this is going to do good because they're also doing a massive capex play. Now, if they're doing a massive capital investment, I think this will do really well and it'll prod an upward journey going forward. And as you can see in the last 1 year, this is the chart, last 3 years also, it is going really well. So it has gone up from 300 to 1,400 in the last 1 year. Again, if you look at the results are also promising. As you can see, it is only in an upward journey right now. The results every year, every quarter, it is doing well, mainly because it is fueled by capex, which is capital expenditure. They're setting up a new manufacturing plant, and that is why you see it is constantly going up. So last 5 years, the track record is looking really good, and from what they have given revenue guidance, they're saying they will grow at 20 to 30% in the next 2 years, and then after that they will go back to a normal growth rate. And even if you look at the trades recently, the promoter has been picking up a lot of stake. September, November, he's been picking up a lot of stake, which is also a very good sign. Now the fourth company is KPIT Technologies. It is in the IT space. Again, very good with respect to software development, 41,000 crore market cap, slightly mid cap. The reason why I put this is to give you some balance in the portfolio as well. And as you can see, this is in a continuous upward journey. Anywhere, anytime you're invested in this would do well. And even looking at the growth prospects, it is not looking bad at all as of now. The fifth company is Ramkrishna Forgings, right? Again, a massive player of your railway component parts. It is going to do really well. Why? Because India is spending almost 1 lakh crore on the railway department in India right now. So this company is going to do really well if the railway theme kicks in. It's only sitting at 13,000 crore market cap with good ROE, ROCE. Debt to equity ratio is literally at 1:1. Market cap to sales ratio is 3.7. So it is comfortable right now. And if you see the last 5 years, the growth is visible. And if you look at the quarter on quarter earnings, as you can see, it is little seasonal, right? 5760, 719, 699, 824, 777, 892. So overall, is there growth yearly from 2020, 2021, 2022, 2023? Yes, there is growth. So this company can be looked at mainly from the railway theme that is going to play out in the next year, and a lot of companies are going to get orders in the next 1 year in the railway space. The only negative I would say is the promoter holding has dropped from 46 to 43, and the positive thing here is FII holding has increased from 14 to 23%, which is a massive growth. And look at the number of people that are holding it. Amazing companies are actually being a part of this journey. Angel One is the next company. If you look at Angel One, again it is similar space, which is the demat broking space, doing really well, 30,000 crore. Looking at the market activity that is happening and looking at the number of option buyers and option sellers in the market right now, I don't think in the next 1 year that this is going to reduce. I feel this is only going to become more. Now another key growth driver for Angel One is two things. They're entering the wealth management space and they're starting their own passive mutual fund, very similar to what Zerodha did. So overall, looking at it, it looks very attractive. Again, a quarter on quarter compounder, 527, 597, 681, 682, 745, 749, 826, 808, 1048. So it has been growing on a year-on-year basis, and I think for the next 1 year it will sustain. It is not sitting at unreasonable P. If it was sitting at a very high P, then a bad result would shoot it down, but that is also not the case. So this is completely fine. The next company is Varun Beverages. I think this company we've been talking about since the last 1 year and has given more than 100% returns in the last 1 year as well. It's gone up from 600 to 1200, and if you think this growth journey is over, it is definitely not over. Right now it is very overvalued, sitting at 680 PE. So it might not move too much for the first 3 to 4 months, but after that it will start giving you a nice rally. This is what I believe, right? And they recently did a massive acquisition of a South African company, which will again start giving a huge growth prospect. The next company, which is two companies I'll show you, which is Titagar and Rail Vikas Nigam. Now both of these companies, Titagar Wagons, 14,000 crores, massive growth, not over yet, will continue to grow going forward, has a massive order book as well. Titagar Wagons is going to be the direct beneficiary of the railway theme that is going to happen if the current government comes back in. You will see a lot of orders coming to not just Titagar, you will also see orders coming to Jupiter Wagons, and there is another stock that is doing well. Apart from that, another direct beneficiary is RVNL, which is Railway Vikas Nigam. Now this has been doing really well right now. Recently it's won an order for creating a station for around 150-160 crores, has a very big order book itself, sitting at 37,000 crore market cap. These stocks will continue to do well. The P ratio is also very reasonable, so no problem at all with this. Again, as you see, it is a good growth. It takes time, it consolidates, then gives one boom, consolidates. Now it's very close to another boom. If it crosses 180, then it's going to hit 200 very soon. As you can see, the company has been growing consistently, significantly. Growth is also there. So again, not a bad play at all, only assuming that our current government stays intact for the next 1 year, right? Now, final company that is there is again in the defense space, which is Mazgaon Dock. As you know, Mazgaon Dock, we all know Mazgaon Dock. Mazgaon Dock again is going to play the Make in India team, because if the current government comes into the picture, the defense budget is going to be allocated, and again Modi will visit a lot of countries, and whenever he visits a lot of countries, HAL Mazgaon Dock starts doing really well. This again has given a nice breakout right now. It is going to go up even from a year-on-year perspective. It is doing really well, right? It is giving a massive growth trajectory, very beautiful with respect to reserves and surplus, no borrowings at all, and massive promoter holding, which is mainly the government of India. So public has very limited float, and that is why this company is doing really well. So again, to zoom out and show you the 10 stocks again, it is KPI Precall, Venus KPIT, Ramkrishna, Angel One, Varun, Titagar Railway, Rail Vikas, and Mazgaon. And if you've seen the last one performance, this entire small case would have given around 250%, but doesn't mean that the past returns will formulate into future returns. I do believe these companies will do well and it will go up. So guys, that was the entire New Year video. I hope you guys liked the gift, because all of you guys kept saying, Shashank, create the small case, create the small case. So now I have done it. So don't shout at me. I have lived by my word and I have created a small case for you. But please understand, I am not liable for this. I have not invested in this, so I don't want you to invest and then come and shout at me tomorrow. Do your own research before investing. I am neither a SEBI registered advisor or an RIA, so I'm not allowed to give you any kind of buy or sell recommendations. Okay, so I hope you guys enjoyed this video, and if you did, put in the comment section below what you liked and which stock you want me to fundamentally review next. And before you go, click on the subscribe button, and guys, have a great new year.